Hello, I'm speaking to you from Oslo, where I'm in the offices of Sissener, an independent investment boutique, which Ravenspoint Capital is very proud to have partnered with recently. And we're very excited to be bringing their strategies to investors in the UK and Ireland. Sissener was established in 2009 by Jan Petter Sissener. Today it has 17 employees and manages about $1.4 billion in equity and credit strategies. Their flagship fund is Sissener Canopus. It's a global long-short equity fund in the Luxembourg UCITS format, launched in 2012 with daily liquidity. It has a flexible and opportunistic approach. Its exposures are adjusted according to market conditions. And it's delivered very strong risk-adjusted returns across a number of different market cycles. It's protected capital very well. It's a unique product with a very differentiated return profile. I'm here with Philippe Sissener, CEO and portfolio manager of the Sissener Corporate Bond Fund. It's great to be here. Thank you very much for having me.
Thanks for coming.
Could you begin perhaps by introducing yourself and the firm?
Sure. Well, my name is Philippe Sissener. I have been the CEO since January 2025. I only joined 7 years ago. Well, that's beginning to be some time, but the origin of the firm started back in 2009, as you said. It was my father who started everything. He's still the portfolio manager of Sissener Canopus, our flagship long-short equity fund. But he had spent 30 years on the banking side. He decided that maybe it was obvious, but at that time everyone was terrified, right? It was just in the aftermath of the financial crisis. So 2009, he decided that it was a good time to establish a asset management company. So he got together a group of friends, family, old clients, and his own money, of course, and decided that it was a good time to invest. So he ran a strategy for 3 years that was quite similar or identical to the Canopus strategy, except it was closed-end. So it was a strategy that lasted from 2009 to 2012. And what they realized when they were rolling that into a new 3-year period was that people wanted daily liquidity. They wanted to be able to invest when the clients had the cash, when the clients had the opportunity. And also what they saw during that 3-year period was that people needed cash for various reasons. So there's a huge benefit of running this as a daily liquidity fund for the clients, of course. But the strategy remains the same. We own the stocks that we like over some time, but we have the flexibility and the ability to both hedge our single name positions, but more importantly, to hedge the movements in the market by buying options and futures on the major European indices, and also in the US from time to time to hedge our exposure there.
So it has a defensive return profile. What should investors expect in terms of what you're trying to achieve?
You know, it's always hard to say a definite number, right? We could give our historical figures, which has been, I think, above 12% in Norwegian kroner share class, which is the longest living share class that we have. We want to make money in any environment, so we're looking at things from an absolute perspective. We've only had 1 year in minus with this fund, and unfortunately, that was we were caught a bit off guard by Donald Trump his last time around in 2018. So the last quarter of 2018 was our biggest drawdown. We ended the year down 5.5%. But overall, as I said, we've had more than 12% annualized return with approximately 63% of the market risk, so a net exposure of 63%.
And it's a global portfolio, but it has a Nordic element to it. Could you maybe outline the investment case for investing in Nordic equities and why an investor, say in the UK, should consider all the advantages of investing in the Nordic region?
Yeah, without being too much ESG centric, I think the Nordics have a very good reputation for governance, for instance, for equality of rights, and also the environmental part. And that's not just a single factor. You know, some of these environmental things are bubbly things that eventually burst. But I think looking beneath that, there are some great companies with some good, I mean, fundamentals, good ethical values in the Nordics. And you've seen that over time, you're able to drive excessive returns by running companies properly and with the correct corporate governance. And I think, well, I don't think I know that the Nordics are also in a quite healthy financial position. I mean, the government, stable economies, um, stable politics. You know, I don't know how many prime ministers you had in the UK the last couple of years, but we can disagree with ours, but at least we have the same ones, right? So I think it's a stable environment to invest in, and it's a good and ethical perspective also when investing abroad.
Mm.
So I mean, when we say that we're Nordic centric, we're looking at the world from Oslo. Um, we don't want to be geographically, I would say, contained to the Nordics because we don't have that big of an economy. We don't have that many companies to choose from. And when we do the work on one of the top 5, call it industrial Norwegian companies called Norsk Hydro, which is an aluminum producer, or you say aluminium, I guess, in UK English. But you have to look at the whole value chain, right? You have to look at the access to raw material, bauxite and alumina, which is what makes aluminium. You have to look at the demand side. You have to look at the German or Chinese, even car manufacturers, and you have to look at the competitive landscape like Alcoa in the US. So when doing that whole job, it would be a pity to restrain yourself from investing abroad as well. So I mean, we have a core view on the world from Oslo, but if we dislike Norsk Hydro, for instance, or we want to own a different part of the value chain or one of its competitors, we want to be able to do that.
Yeah, yeah, and obviously you're based here in Oslo, as you said. There's a local advantage, I imagine, to being here. Wonder if you could just talk a bit about the team, because alongside the equity strategies, I mean, you run a bond fund,
Right.
in which obviously very complementary. Interested to hear a bit about the dynamics between the team and how you look at companies and what the advantages of doing it your way are.
Sure. So we have 7 people in the investment team today. And my background is from credits. I mean, I've worked with restructurings and high yield bonds since the global financial crisis. I managed a series of fixed income funds at something called Arctic Asset Management before I joined Sissener in 2019. And I think it's great for us to have this cooperation across the asset classes, because I think looking only from an equity perspective or only from a credit perspective, you tend to get locked up in one narrative, and you miss the I would say dynamic, which is really healthy to have somebody always chasing, looking for the upside, where someone's keeping that critical mindset and looking for the downside risks at the same time. And I think that, especially when managing a long-short equity fund, is great. You find some great single name shorts, and you also keep the more bullish analysts with both feet on the ground, I'd say, because the prices tend to lead the narrative as well. But for us, having 5 sector specialists, I'd say, on the equity side, in addition to Michael and myself, who are mostly predominantly credit background. Well, I've been working also closely with equities my whole time, but it's predominantly a credit mindset. So I think the way we work together is that we have dual coverage of each sector, and we have only one final decision maker, that being my father, Jan Petter, in the Sissener Canopus, the long short fund, me in the corporate bond fund. And I think you need to have, although we work together as a team, we sit around the same desk, we meet management together, we discuss cases across sectors together. You need to have one person in charge who takes the final decision.
Mm. Final question, really, just a little bit about touching upon how the team works. I think you think about things in a thematic way sometimes, and wondered a little bit about positioning and what sort of themes you're seeing in the portfolio now, and what you're thinking about portfolios, over the next 12, 18 months. It's obviously been a challenging
Yeah.
time, and you've navigated it extremely well, I have to say.
Yeah,
Yeah.
looking ahead, I mean, it's much of the same drivers that we've seen so far. I mean, at least the last couple of years, we've seen a huge underinvestment in energy in Europe, both the grid, but also, I mean, access to energy. The Germans shifted their dependency from Russian oil and gas or predominantly gas, to floating gas from Qatar. That was not a great move now that all the gas is stranded in their Hormuz Strait. So I think we're seeing gradually that Europe is waking up. They're seeing the need of energy independence in Western Europe. And that's been a part of, I mean, seeing what we call powering up Europe, a theme that we've had for a couple of years. So that's, I mean, companies like Rolls-Royce, Siemens Energy, ABB, Prysmian, Nexans. Now we don't all own all 5 of those now. We're down to only 2 of them. But that was a theme we had started a couple of years ago, a theme that has served us quite well. And that will probably continue to serve us well, but although we are more selective than those 5 names that we started out with. We also have a theme within AI. We don't want to choose, or it's hard for us to choose. So we have people traveling to Silicon Valley. We have people attending Teams conferences everywhere, and also, I mean, both physically and on Teams. But for us to pick the, I mean, ultimate robotics, I mean, which end product will win, we're looking at the more picks and shovels part of the value chain, like the semiconductors, like ASML, who produce the semiconductor fabrics or factories, like Infineon, like Nordic Semiconductor, which is a Nordic company, which is we've been invested in for many years. I mean, the weight of the portfolio goes up and down, but the underlying trend is so strong that we've stayed invested for, I think, almost 10 years now.
Excellent. Well, Philippe, thank you very much. As I said, we're really excited to be partnering with you. Excited about bringing the fund and strategies to investors in the UK, and to having you over in the UK in due course.
Likewise, just reach out if it's only a couple of hours plane right away.
Excellent. Thank you.
Thank you.